Hey guys, so we just we finished that call, I don't know, about an hour and a half ago, something like that. So I was just going here, just focus here on um on the NASDAQ, and I was going over the potential opportunities that I missed in the last 2 days when I wasn't trading it or able to trade it. And it's just a good exercise for me to find the exact, very specific moments where I would have gotten involved for a quick trade. And I figured I would share this. Um, yeah, especially Luca, since we've been going through these types of setups. So, going to the 5 second, and I'm going to start here with this. Um, with this long trade. So, I guess it was this one here. Yeah, it was before the open. So, Um, okay, first of all, important to note, right? So, um, see how all day, and these are even if they're like short scalps, like very quick scalps, how many real opportunities are there to get involved that have edge according to my system? I find here one, I'm not sure about this one. We'll go into it in a minute. One and two, and then one and two. So that's four, and then one and two, and that's six. There's only six opportunities throughout, um, a trading day that starts from roughly 7 a.m. Eastern time all the way into the close four. So we're talking, about 9 hours of trading. And there's only six very punctual opportunities where it was actually there was edge for us, for me at least, to get involved. And that tells you something, right? That tells you that what we were talking about, that sitting on your hands and not getting involved until you see that trade with edge come. It's so important. Um, Here's one thing about the principles that are behind the style of trading that I have in my these setups that we haven't really discussed. And we've talked about the that first move on a breakout that sort of breaks out and creates an exhaustion candle, and then if you see the a trap there where it doesn't pull back, then you get in for the next leg. And that's at the breakout level. But there's also another area where the same principle for entry applied, but there's even more edge. And that is not at the beginning of the breakout, but at the very end, after a breakout. In this case, I guess we would consider, for example, we can say that this was like a breakout trend here, for example, a break, it was on a downtrend, there was a reversal, and then there was this like break here, breaking out of that trend line. Um, Say that we're not able to capture any of this here, but if you're zoomed out and you know that there is a very, very strong area of liquidity, which in this case is this area here, that is a very obvious and very likely target area. Um, and the trend is already almost there. That is very bullish. So in this case, that's what this is. It's breaking out of this structure here, and then it's on a trend, and it's on a trend up. Even if you don't capture any of this trade of the trend, even if you don't capture the breakout here, the trend is exhausting into this area of liquidity, a very obvious target area, because we have a very strong VPOC on the volume profile. Is telling us that basically it has somewhere to go. It's trending towards somewhere, and its likelihood of it testing that area is super, super high. And the closer we get to it, the more likely it is that we're at least going to test it, because the trend is actually becoming kind of um, it's becoming kind of parabolic. You see how it steepens into the momentum becomes um, even more, it accelerates into that area that it's looking to test. And I have it marked here with that white line. 25, 7, 25,700. So in the low 700s, in the teens, right? So go back to the 5 second. So um, knowing that, that trend, it's already trending hard. And even if we've missed the majority of the move, it's breaking out here. You can see that there's no, yes, it did break out of a structure, but if you see it on the 5 second, there's not many opportunities here for real momentum, right? Um, this is an example here where apparently we could have, this is like a little breakout and some momentum. And we could have used the principles that we always use. That okay, it breaks out of the thing. It gives us a little exhaustion here, but not quite. This is like in the middle of the thing, but it's still like in an uptrend. But see how that momentum accelerates and it becomes really parabolic into the area that's going to test. So um, um, the reason I think that this has a lot of edge is because if we have that level identified and we know it's going to be here, in this case, I would have thought it would be like, it's going to always be the whole number. So it'll be 25,700. So we're using 700 as the level that we know it's going to taste. And it always overshoots a little bit, but let's say that it's 700. So it's this level here, right? Well, if we're getting this, and then we see it moving up, and then we see a very clear, obvious exhaustion, which happened here. Look at this candle here. It also happened kind of here, but let's say that this one is like the strongest one. Just pick one for sake of this example. When you see that exhaustion, and then you see it kind of like, okay, pulls back a little bit, but comes back and kind of traps, and we have a clear VPOC after that exhaustion, which ends up being here, like this level here, I guess. Um, then we can get in for the next leg, which is going to be a pop, taking out that exhaustion level at the same way we've already been doing it so far. But what makes this have so much edge? Well, that this exhaustion occurred, the high of this exhaustion was 684. We're just literally just 16 points away from testing that 700, and we're already on very pretty much proven momentum into that area. So this little exhaustion, if we see that it traps, this momentum move is pretty much almost like 95% likely. This is imminent. This is going to happen. This pop is going to happen. So this is one of those spots where it is such a high probability trade that you just have to put all your sizes in there, because this is a given, at least into 700. It's only going to be, 15 points, sort of, a little bit more, maybe. Bam. This is the highest odd trades that exist in my playbook anywhere. It's when the same sort of entry, exhaustion, volume exhaustion, and then trap after that volume exhaustion for the next leg. But it's not the next leg to nowhere, or that there's no, it has somewhere very specific to go, and we're almost there. That's what makes it so powerful, because you can pretty much, it's guaranteed it's going to pop, bam, and into that area. And it's a quick scalp, but it's a very high odd scalp. And here it even overshoots and gets into 700. It does the same thing. Look at the exhaustion here, volume exhaustion, bam, consolidates it a little bit. It does retrace a little bit, but then comes back and reclaims that VPOC. Look how strong that VPOC is, right at again 700. When it takes it out, what do we get? Another, look at this move, another really just strong momentum pop up to the upside, bam, and that's it. And that's where that was it. That's all it gave. Then it chopped up. in that area until it lost steam. Boom. And then, well, this happened at the open. This is 9:30. So, but this is already, sort of like it's rolling over. That was it. That was all I had to bid. But that bit of exhaustion right into that area, those two last pops were that those had a lot of edge because they were into that target area, approaching that area. So that's how powerful that concept is there. Um, then, well, we got this, the open. I didn't look at any of this here, um, but then I'm looking more. I was just looking for more little punctual moments where there was structure that could be traded, like here. And by the way, trend lines are always, a big part of it, um, because that's the structure that gives us, okay, it needs to break out of that structure, right? So here, clear as day, the strongest VPOC there, which is around 605, 25,605, so 605. Again, whole number, which is important. This already kind of, we already collapsed into that area, chopping around here. We see some structure here, a trend line that we can use, and we see that VPOC. And then if we zoom in, how did that little breakout happen? It happened pretty much in the way that we've been talking about. It's like it popped here, got rejected, and finally, bam, it breaks below the trend. We get some exhaustion here on that break below trend, and then it stays there. It doesn't come back or anything, but it stays on there trapping. And then this is our trade. Bam. And it's from 600, bam, into like, again, another 15 points until it exhausts here and whatever. Maybe you take that for 10 points. It's somewhere between 10 and 15 points. It's a very sure trade. When do we see that happening again? Well, not for another hour, right? Comes, chops around, blah, 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 until we get some structure here. And then same thing, we have a strong VPOC here. In this case, it's 578. It's sort of aligned with where it exhausted here. The most important thing to look at is volume. It's not price, it's volume. It's not so much the shape of the chart. The exhaustion volume candles, the candles where we see volume exhaustion are the ones that dictate where I can get involved. So in this case, for example, we didn't capture this, we didn't have structure to capture this, but this was clearly a momentum, move to the downside. It took out the lows, but look what it did here. It created that exhaustion candle. So now I'm fixated on that. So it chops around, retraces, whatever, but then it gives us some structure. So now I have a trend line to use, and I have that volume exhaustion that sort of marks a level. So if I'm going to be focusing on that, let's zoom in to see how it really looked. And let's see where the volume profile is. Okay, so the one thing that's missing here is a strong profile, because I want to see a strong VPOC that I could use. If we zoom in, we kind of see it here. So we see it's like 580. A little bit of a double distribution here. It's not perfect, but it's giving us a pretty much a strong area here. So that's important. I want to see that when I see structure. So we have that sort of VPOC level here, in case you're going to be scalping this before the break. But once it does break out, then again, what am I looking at? I'm paying attention. It breaks below the structure. We see a little on that candle into this wick. We see a little bit of volume capitulation here. The important thing is that it broke below the trend, and we see the volume capitulation. It's not huge, but it's compared to the previous candles, it is. And then we're paying attention. What does it do next? Okay, it didn't stay down. It kind of retraced up, but it didn't go back into the wedge. And then when it comes back down and it's taking out that level that we marked, then it's telling us that's coming in. But again, if we look further left, we were fixated on this volume capitulation. So we would say that the low of this, where it created this, is the key one. So in this case, bam, it comes into that, it doesn't reject, and when it takes out that, that's when the real momentum comes in, and that can be the trade. Bam, and well, this was actually a pretty huge move. Well, not huge, but from the high 60s to like the 40s, 15, 20 points. Same thing, but it was just pure momentum because it took out that level that was marked by this volume exhaustion. Let's see, then what was the next one? We see some here. Same thing we see in this case, some structure here where this was trading tight against a trend line. We see this volume exhaustion to the upside, which means that there was like selling. They were sold hard into this pop, and it sort of trapped here. This could have been another leg up, but it looks like it failed. And well, if it didn't give us that leg up, now it's breaking trend, and we're getting volume exhaustion here. But if we're pitching that against the levels that we already had here, we had volume exhaustion here, we had volume exhaustion here. I guess in this case we are heading into break of trend into that level here that had already been marked by these volume exhaustions. So but the entry technique is kind of like always the same, right? Like we get like an exhaustion. Well, here it's not so. I'm not even sure why I marked these because it's not so um, not really in line, not so obvious. I think we didn't get the volume candle component here so much. I guess we did get it a bit here, but then this is not accurate. So we get this flush here and we get this exhaustion, and then it stays heavy. So in this one, probably the trade would have been this. I guess this part. And this one, I'm not sure. Probably this one doesn't really fit. Maybe just because it was breaking below trend, but this is actually the one that follows the rules of getting that exhaustion first and then trading the trap after the exhaustion. So it would be just this one. Let's see the next day. Let's see what we got the next day. So, okay, I didn't find anything. This was the one we already discussing when we were on the call. So we got the trades on the way up. And again, this one was exhaustion, bam, and then it trapped, and then we got this little pop here. And then it's sort of rolling over, but it doesn't continue, but it traps, and then again, VPOC is a huge component. So you can see this as basically as a failed breakout, failed continuation for the next leg. So we see how it fails, but then it comes back and reclaims that VPOC. That's the other principle that's like A plus for me in my playbook, which is anytime there's a clean structure for a breakout that fails, in this case it fails, when it comes back and reclaims that VPOC from that structure, then bam, we get the momentum. So in this case, the trade would be this. And that's where the momentum comes in. And it's, a move from 70 to 98, so almost, 20 to 30 points, bam. And if you see this overall, like we were discussing earlier, we said the first exhaustion, trap, bam, the next pop, exhaustion, and then after that one, we do get the real red candle. If you on a 1 minute chart, this would be one or two candles. And then that's where the short comes in. Then we get the lower high, and and then we get these move lower. Um, and these all sort of, again, these follow the same. This one exhausts. Look at the volume candle here. So it exhausts here, traps, and then continues lower. It's not perfect because it's missing. Well, it's not really missing it. Look, we have pretty much a pretty clean volume profile level, which is here. So we do have a level to go by. And then, it kind of consolidates around that level, takes out this, we're exhausted, bam, gives us this until it exhausts here. So that was from 700, wow, to this was a pretty hefty move. This was almost like 40 points. Exhaustion, same thing happens here. We already went through this one, right? And then bam, same. We got another huge momentum trade here and another one here. So, um, you know, this is where the points where I found edge. Like I was saying at the end of the call, what I was saying, when I start seeing this, I get worried that I'm going to be chopped up. So here I would choose not to get involved. And in this case, it did continue. But for example, here we get the same thing, right? This bounce up here, and here we would have been crushed. Looking for continuation, that never happened, and then it goes back up. But then here comes the same principle that I was just talking about. We could see this as a failed structure that was supposed to break out to the downside for continuation. We have the VPOC here, right in the middle of it, and it didn't. It failed. So when it goes up, okay, but and it fails a lot, right? Moved away from that area a lot, but it didn't really retrace back. It's coming back down. Now what's happening here? A reclaim or retest of that VPOC, of that structure that failed. And now that has a lot of edge because it's coming back to reclaim it. So it didn't break down here, but it sure did here. And it's because of that. That's very, very super, super powerful. Um, that pattern where something fails but then comes back. So how did it happen here? If we zoom in, it's the level is around 478. Let's call it 480. When it's coming back down, we have we could have captured actually this part because it's when it's testing the level from when it's coming back and testing that level, it kind of blows through it. So we get this then, and it exhausts here. And then after that exhaustion, it chops around, it traps more. It's not perfect, but here's the same principle. It does retrace back upwards. It looks like it's a failed thing, but then it comes back. And here we actually have, it's even better because we have a VPOC here and we have some structure. We have a trend line that we can use, and we have, this was very well demarcated by this volume exhaustion. So then when we take out this area, we have three things that are going on at the same time. Breaking below a trend line, rejected from VPOC, and taking out the level where the volume exhaustion happened. A confluence of three different things, bam, we get momentum. In this case, from around 450 into 390, like 60 points. This was like a huge move. So those are sort of like all the principles here at play. The most important one, in my opinion, is always volume. The volume exhaustion is telling me where it's likely that I'm going to get involved and where I have to start paying attention for structure. After this volume exhaustion happens, even if we don't get the break right away, I start paying, I start zooming in, hyper focusing, looking for structure. The minute I see higher lows and I see anywhere where I can draw a trend line, I draw it. And I look for my VPOC for the I look at the volume profile and see which level I'm going to use for reference. If I'm really zoomed in, it looks like it's going to be this one, right? So here we have the structure. We could even draw top of the structure here, sort of. Um, we see the volume point of control in the middle of that structure. It breaks up out away from the structure, so it looks like a failed, a failed structure. But then it's the same principle, but but on a smaller scale, on a lower time frame. It's fractal, right? It's the same pattern that we see here. It's actually happening here on a lower time frame. It fails, but then comes back, reclaims, retests the VPOC here. Bam, that's where we get the momentum. All three things happening at the same time. And it all starts with the volume exhaustion. It all starts with identifying the volume candle, which indicates where that volume exhaustion happened, is the first step for building our trade here. Um, and that's it. That's just, again, I think it's a good exercise to do these things. Hopefully this doesn't go for too long. I'll talk to you guys then before Monday, I guess, or on Monday.